Alright, couple things to talk about here. How hard is it to get your money out of the bank, your own money out of your bank, today, while there's no collapse, there's no martial law, no nothing, right? And how is my next statement going to affect that in the near future? And the next statement is the FDIC, which is your insurance company that we all have when you deposit money in the bank. It used to be $100,000 or $150,000, then they made it $250,000. And then after the big banker bailout and money was flowing out of the United States like crazy, they decided we will insure 100% of all money in the United States banking system. In other words, if you're a multi-millionaire and you have all that money in one single bank account, it's insured. They will insure it, FDIC insured. Now that's interesting because technically the FDIC only has up to $500 billion to insure the money with. And that, my friends, is with the Treasury Secretary or U.S. Treasury lending it money. And the law states that they can only lend or whatever, give the FDIC up to $500 billion or half a trillion. Do you think all of Americans' money combined is only $500 million? Oh no, it is trillions upon trillions upon trillions. Somehow though, they still said we will insure all the deposits in American banks until the end of 2012. So January 1st, 2013, they're no longer insuring all the deposits, going back to what it was, which I believe was $250,000 per account, etc. So if you're a multi-millionaire, you better have multi-accounts with up to $250,000 in each, etc. I believe it's $250,000 the limit. So the next question is, why would they change that to go back to not insuring everything? Right before this happened, the DTCC or DCTT, whatever it's called, right? The Seed & Co. Corporation that had its basement flooded by 20 feet of water or whatever, which had $36 trillion worth of stock, certificates, bonds, who owns what, the chain of custody, who, you know, it's all underwater and gone. Sorry about that. That just happened, right? That's this month. That just happened, beginning of November, Hurricane Sandy. And then you mean to tell me a month later, at the end of that month, December, we're taking away insurance, FDIC, so all this somehow is all tied together. So I had a video response that was personally sent to me in an email of a guy that told me basically something that I'd already been through several years ago, which was that if you try to take out more than $10,000 out of your bank account from your bank, you're going to get met with the response, usually, we don't have that money, sir. We don't have that much. We'll have to place an order for next week with the Federal Reserve itself to have that kind of cash on hand. I don't know, and he didn't tell me the specific amount he was trying to get, but I can tell you personally, and this was again several years ago, before anything really bad had happened, I still saw the writing on the wall and wanted to pull a bunch of money out at that time, most of which now is spent on silver. So I tried to get $12,000 out. Sir, we don't have that money. We can call another branch and see if they have some of it, and then you can go to that, and if they don't have it, then in the third branch. I said, no. When can I have the money? Tuesday of next week. All right, I'll be back Tuesday. Went ahead and came back, and they had the money there ready for me. Now, if I were to take out, let's say $10,000, my own money in the bank, right? It's mine. You're just allowed to use my money, Mr. Bank, so you can then lend out 9 times that value, or $90,000 worth of loans on my $10,000 that I put on deposit with you. So what happens if the bank does lend out $90,000 and then I decide, yeah, I'm gonna get all my $10,000 out? They can't call in the loan of $90,000. That has to still be out there. So if they go beneath a certain threshold, the FDIC and the Federal Reserve will be looking at their books saying, hey, your reserves are a little lower than they're supposed to be. You need to come up with some capital. And if they can't come up with capital, that's when there's a shotgun marriage taking place where they go down and another bank gets all their assets, and there's a distributed fee that the FDIC will eat, as well as the new bank taking over those accounts and that bank, the former bank now. So this guy contacts me and says, oh, he said he didn't tell me the amount, but it had to be at least $10,000. So what does the bank do to him? Because again, if you're gonna take again, on $10,000 deposit that you're taking out, if you were to take out, forget the word deposit, if you were gonna take out 10 grand out of your bank, you're stopping that bank from being able to loan out $90,000. Or if they've already lent that money out, of course they probably have, you're now forcing them to come up with more capital to replace that $10,000 you just took out. So the banks don't want you taking money. The banks don't want you taking your money out of their bank. It's your money. They don't want you taking it. So what did they tell this guy? He gave me the letter that they gave him, a little printed letter. It was a letter scare tactic to stop him from pulling his money out of the bank. Now, I haven't heard of this yet, but he showed me the letter they gave him. In the video, he shows it to me. And in the letter, it claims, you know, such and such regulations and rules and laws state that any transactions deposited into or out of a bank account in America, anywhere in America, we must notify the IRS and federal government. And they asked him, you're familiar with this? No, well, no, not really. What's that about? Well, any transactions over 10 grand, they told him this, any transactions in or out over 10 grand, we have to notify the federal government, so you may want to reconsider, you know. He says, well, all right, well, then I'll do it in I'll come in today and tomorrow or whatever, and I'll take, you know, less than 10 out today and less than 10 out tomorrow or the next day. Well, did you read the subsection under there, that same page? No, what's that state? Well, it states that if we think that there's multiple withdrawals to go, in other words, kind of go under the radar and pull out more than $10,000 by multiple withdrawals, we're also supposed to notify the feds and the IRS. And he says, and are you going to do that if I simply just want to take my money out because I need some cash? We can't discuss that. It's something management would have to do. Well, can you get management? Well, management's not gonna, it's illegal for us to tell you what we're gonna do in that regards. We're not even allowed to discuss it. But we did want to make you aware of what the law states. In other words, don't you dare take your own money out of the bank. We're gonna report you to the feds. And what if the feds think you're doing something bad with that money? Oh, they might start spying on you. They may try to seize your money, right? They're trying to put all these little seeds, these little thoughts in your mind. But it didn't work. He's still gonna pull his money out. And I told him my story from years ago, which it was the same thing. They didn't tell me and try to scare me into it. You could tell they didn't want me taking it out. But I said, oh, I'll gladly wait till Tuesday. I'll be back on Tuesday. Okay. So I came back on Tuesday and I got my money out. And when they handed it to me, it looked painful, to tell you the truth. It actually looked painful for them to hand it like, it was almost like they thought it was their money. Like, oh, do I really have to give this back? Isn't there like a finder's keeper? That's the kind of expression I got on their faces, handing me my own money. And again, if they're making loans out on that money, and then I come in and I pull out 12, and then this guy gets nervous, he wants to pull out 15, and so-and-so gets nervous, oh, everyone starts getting nervous. This is what always happens in history. People start getting nervous, I want to pull my money out. I gotta pull my money out, I want to pull my money out. Every time you pull out $1, you are damaging the banks ninefold, 9 times. Again, because they can lend out 9 times the value of their deposits. They only have to keep 10% of their deposits in their bank at any time. The other 90% can be lent out. Or what banks love to do is, rather than say, well, if, for example, we've got $1 million in deposits at our bank at any given day, by law we can keep 100,000 in here and then loan out the other 900,000. But what banks also decided to do was, well, why would we, if we have $1 million in our accounts, why would we be foolish enough to only lend out 900,000 and keep the 10% or the 100,000 here? When we'll pretend the $1 million is that 10%, and then we'll just create $9 million out of thin air to loan everybody. That sounds much better, because I'd rather not lend out $9 million than $900,000. Come on. So a lot of banks did that. So if that's the case, and you go pull out your money, and the next guy starts pulling out money, you are affecting them greatly. And they're going to be under, and the percent is so ridiculously low. I remember seeing it on the FDIC. It's like 1%. Like if you get down below like 1% or 0.5% of what you're supposed to have in there, literally like 0.5% or 1%, somewhere around there. It's been a long time since I looked it up, so bear with me. You're below the 1 or 0.5% threshold. You need to come up with some capital. 0.5%? Are you kidding me? They're allowed to go that low, 0.5 or 1% of what they're supposed to have? 1%, yeah, that's the rules, FDIC. But, you know, nobody comes in and pulls their money out. It's all digital. You're doing transactions online. And if you wanted to pull out $10,000, and that's what she told him, the guy, we can write you a bank check today, sir, for the full amount if you'd like that. He says, well, that kind of defeats the purpose of me, you know, needing the cash. And if I take that bank check to another bank, chances are that the other bank is not going to be able to cash it either? Well, probably, yeah. Well, then I'll wait till next week. And you know what? Go ahead and let the IRS and the feds know I'm taking my own money out of the bank. So, it is incredible that these banks are now almost acting like it's theirs. Hey, hold on, we're married here. We're married. Yeah, whoa. What do you want to take that money out for? Why do you want to do that? Why don't you just leave it? Let me give you a bank check instead. Don't ask for cash. Come on, man. What are you doing, man? Incredible. So, as I said in the very beginning of this, take that into account now, that's how things are. And then say in December or January 1st of 2013, no more deposits over $250,000 are insured by the FDIC. I think you're going to start to see a massive outflow of funds from the United States rapidly at that point. And if that happens, are we expecting a stock market crash, big economic crash before that, around the same time, right after that, sometime soon? My thoughts are yes, because why would they do that now if they plan on letting Greece and the EU and everybody else just string along for another 4 years or 3 years or whatever? Why would they be doing it now? No, I don't see that. They're doing it now because they're preparing now for something soon. So, that's my take on it. Take care.